some money from. This is the really good part, because when you look at risk and reward, more money can be made in the down periods, in the bear markets, in the periods which are boring. If you're buying at these lows, this is all the upside. If you're buying at the highs, your upside gets far more limited, like extremely limited, especially when you got to rely on more energy coming into the market. So if you want to get to 100K Bitcoin, from the tops, it's like 70%. But if you're buying it from these lower periods, then you're at 900%. It's just vastly different returns. So be excited for this period that is potentially coming up. I suspect that's what we're going to go through. Probably the noise is going to get less. The volume's going to get less. We're going to start to drop off a little bit. Maybe we'll get some pushes down into some $20,000 levels and then start to base out in the 30s to 40s to 25, somewhere in this region. And then you can see that the returns from these levels improve drastically compared to the highs. So just to get back to our 100 grand marker from where we currently are at 34K, we're at nearly 200%. But from the tops, you're at 60, maybe 70%, depending where you bought. So it's huge. Stick around for the boring periods. Get excited for the boring periods of the market, because you can bet your bottom dollar most people will leave the market, because that's why they get boring and get slow. If it doesn't happen and we shoot straight up, great. You sort of make your money back. Expect people to take profits because they're scared and they want to get out. That's kind of how a double top happens. But overall, this is the exciting time for me, because I feel confident and I feel at ease to be able to buy in and just wait, be patient for the market. But I definitely don't like the feeling about buying at those tops, and we've talked about it in many, many videos, and I'll recap all that in a video coming up, like I said, in the next sort of 24 hours. News and data myths. So the first one here is, I think with all these updates coming for Theta, ETH, ADA, that we'll see a run up next month or for Theta and August for ADA. Basically, there's updates, there's news, there's people talking, there's promises by CEOs, all this sort of stuff. If the market is in a bear market and it looks like it's much easier for it to go down than up at the moment, then even with the news, I'm not expecting big moves. That's just what happens. It runs on market sentiment, not necessarily on news. Now, this is my opinion. This is why I trade the markets. That's why I've survived so long in the markets. If you want to run on news, go for gold, all right? But it's much easier to run with the tide than it is to go against the tide. And currently, the tide is going out. It's going out. We're going to get another tide, but it's going out. There's going to be news and stuff like that. I'm not saying that the market can't run. I'm not saying that Theta can't go up, but currently you're going to be pushing against the tide if you are waiting on these things to get it back to all-time highs or even past all-time highs. It's just a much harder look at the market. So the other thing is to do with myths is data. Looking back at previous bull markets, we do that as a way to see what's happening with history. Like I've talked about before, looking at history is like the market's resume. It doesn't mean that that employee is going to perform exactly the same when they come and work for you. And that's the same thing with the market here. When we're looking at bull runs, the mid bull run did exactly this, and then it did exactly that, and it's going to happen exactly the same this time. It's very, very short-sighted. It's not an approach that I take to the markets at all, because the market will always do just enough to fool you at the top and at the bottom. And so that's why you've always got to be prepared for either way that the market could go, up or down, or look, even sideways. Maybe we just don't get anything and we head sideways. So there's no set rule book, or so there's no set outcome that the market is going to give you. There's just the probabilities of how these things may happen. So if you get yourself stuck in a mindset of the market will definitely do this, or the market will do this because of news, or what we've seen in the past on data, it's a difficult one to get yourself out of. Just stay fluid and flexible with the outlook. And as I said, I'm not having to go at these people here. That's just their opinions. I'm just explaining how I have experienced these in the past, and basically just sharing it with you guys. As for manipulation, that's been a big one over the last few weeks, especially with the Wyckoff videos going crazy and people just getting into the Wyckoff state of mind thinking, so this one isn't specifically about Wyckoff, but Wyckoff looking at the structure that we saw at the top and how it played out almost exactly, but then using the Wyckoff method on a 4-minute chart or a 15-minute chart or a 4-hour chart. It doesn't work like that. So that's what I just wanted to mention about manipulation. I'll probably talk a little bit more about it in another video because this one's already getting long enough. But manipulation, do you realize, et cetera, that there's Wall Street doing this and other guys doing that and so on and so forth. Look, I appreciate it. No disrespect, peace. I'm just explaining what I see here. There's manipulation in every market. Surely you guys see that. There's manipulation everywhere. It doesn't really matter. The point is that you're basically playing a game. If you can understand the rules, then you're going to be able to play it all right. Things work. A lot of things do work. Fear, greed, index is not relevant. Things are always relevant. It's just a matter of how much emphasis you put on them. You could say 0%, and you're right in this case. If that's your opinion, then you're going to say 0%. I agree. Look, just keep buying. There has to be a strategy to it. And my strategy, looking at history, seemed to work out reasonably well when I just want to take a chunk out of the middle, looking at the plan here in this video, fear and greed. Check it out after this video. So far, it's done reasonably well. All right, Ponzi scheme and investments. We're nearly at the end here. We're looking at stupid people. Why do they tell you to hold it? Because everyone cashes out, the Ponzi falls down. That, I've looked at it and looked at crypto market, of course, stock market, land, the biggest market in the world, land. Anything that is investment, you could look at it as a Ponzi scheme. You could look at everything as a Ponzi scheme. If you cashed out of everything and you just had cash, then that would all fall down as well. The stock market would fall down. The land market will fall down. Sure, we need somewhere to live. So in that case, we need to have land. But the way it's been built is basically on a Ponzi scheme model, looking at fractional reserve banking and who gets to own land. It's privatized with bigger individuals or bigger bank holds. Bigger wallets essentially that can afford to have more land. So I'm not going to throw the whole Ponzi scheme onto everything because it is, and at the same time, you go down that path, then you basically just become a real cynic of everything. So moving on from manipulation and Ponzi schemes, you just don't want your mind going down that path if you've got a direction of making money and making a good place for yourself in this world. Bear market, in short, we're in a bear market.
For just $67, you can make as many videos as you want, and you never need to pick up a camera or use any fancy editing software. With Doodly, you drag.
So it's over. Nice. Again, this sort of mindset is probably going to keep you out of a market because you're scared and you're waiting for something else to happen, for everyone to come back in, for all the sheep to pile back in so you can buy at highs. No offense to these guys here, which are anonymous avatars again, but look, you get my point here. I hope you do. Let me know in the comments what your thoughts have been over these comments throughout this video. In short, look, I'm waiting for a 50% break as well. We're definitely more in a bearish side than we are in a bullish side. That doesn't take a genius to see that, but I don't think it's going to happen like it did last time. I don't think we're going to see a 3-year bear market before we break all-time highs again. That's not how it's been every time. And like I said with the previous comment, if you start putting yourself, setting your mind into that direction, that we're just going to repeat exactly the same as we have done every other cycle, then you're probably going to fall short of the mark. So stay flexible, stay fluid with your thoughts. Common misunderstandings. Litecoin. I mentioned this in a previous video, how much garbage Litecoin is, and just looking at a dollar value here, went from 40 to 380. I always compare cryptos to their Bitcoin or Ethereum values, and Litecoin has been down against Bitcoin for a very, very long time. Regardless of the dollar value, I want to protect my risk as well. I'm better off buying Bitcoin than Litecoin. Same deal with Ethereum. At first, it was looking okay. We might have had a break, but Litecoin has underperformed extremely well. Yeah, it's just been a very bad performer this entire bull market. It doesn't take a genius to see that on a chart. The dollar value, sure, it's gone up, but so has Bitcoin, so has Ethereum, and it's gone up more. So that's what I'm talking about when I look at these. It's a common misunderstanding or misconception that some cryptos are going to do better than others, or that they have done well. Look at the Bitcoin chart. When you look at it, LTC, BTC, check that out as well. Staking. Why in God's name would I stake in a market like this so I can be liquidated in a few hours? You can't get liquidated from staking. And this might be news to new people, but if you're staking your cryptocurrency, it's not leverage trading. It's not trading on margin or anything like that. It's essentially you hold the cryptocurrency and then you delegate your holdings to a stake pool. And so basically you're giving them your vote in a kind of roundabout way, and that then secures the network. So you're not going to get liquidated from staking. This is the first time I've seen this. So if you guys are thinking that yourselves, yes, it doesn't work like that. So last one I've got here is you're growing on me, Jason Pizza. I used to not like watching you, but you're a good dude and give good info. Thank you very much. I'll leave you guys on some good positive notes. Cheers. That's the staking pool down here. If you haven't already, make sure you follow me on Instagram. Daily Q&As. I've got more uploaded there today. Twitter. Join me over there for news. If you don't have an account, get yourself an account and go follow some news articles over there. Go follow some good people. That's going to keep you in the bull market, keep you interested in cryptocurrency. I said bull market, but I mean cryptocurrency. Keep you in crypto throughout this period, whether it is a bear market, whether it's just a sideways period. This is the period that you're going to be making some good coin, so stay with it now. This is the most important time. This is the actually urgent time in the market. Do it. I don't believe you'll regret it. I definitely didn't regret staying with the bear market through 2018 and 19 and 2020. It's turned out extremely well, and I can sleep stress-free at night. Found some value from this? Let me know. Hit the like button down below. Bell notification icon after you've hit subscribe. Thanks once again, guys. Make sure you stick around for the end of the video for the Bitcoin strategy plan. I'll catch you at the next one. Until then, have more fun to get more done.